I'm just looking at the big picture. Money is still cheap and abundant. Stephanie made that point. Earnings, Ed Yardeni had a piece over the weekend. The most explosive upside surprise maybe ever, like of all time, for Q1. I'm seeing huge opening gap higher in foreign developed large cap stocks, mostly Europe, Japan. Look at that, though. Look at MSCI EFA, a gap open to get the month of June started. I'm seeing XLF up 1% today to all-time highs. Take a look at the IYR. Give me this REIT index ETF. Massive, massive breakout. And then I look at my individual REITs. Let me tell you a question, because I'm not going to wait for your response. What's a good inflation hedge? How about home rentals? Look, so take a look at the breakout in my name, Invitation Homes. Clear and present danger to the bears. These things are rocking. Simon Property Group, now 130. Forget it. It's gone. On the way to 180. Almost no resistance till it gets there. Crude is ripping. Energy stocks are following that rip in crude. It's a bonanza in that space. So it's a very impressive rotation. I agree with Stephanie. It's hard to get overly bearish. You do have some very big important stocks in no man's land. Apple, Amazon, Netflix, doing nothing, but that's okay. There are plenty of places that people are making money. I don't know why we have to overthink it. We're going to have a taper. It'll probably be the end of the year. The Fed's going to spend every month between now and then getting us ready for it. They're going to let slip the idea of a taper every time they speak.
Right.
By the time we have it, I think we'll have a taper, no tantrum. In fact, I think the market is so worried about inflation that when they start tapering, unlike 2013, it'll actually be a relief. People will say, oh, thank God they started. So that's where I am, and I'm just looking at price. You could make things up that aren't happening. I'm telling you what's literally happening on the screen in front of me. Going north.
Love it. Mic drop on that. Tiffany, is he right? Because it sure makes a lot of sense to me. Maybe people who are trying to get negative are just overthinking things, and it's as simple as Josh put it.
Yeah, I don't think it's complicated. I do think it's simple. Listen, Scott, I think we're going to have an easy, breezy summer, right? So, like, the earnings story continues to be extremely positive, as we've mentioned earlier. And we're also really going to be in super, hyper, full reopen mode. And so people have been saving money, so they have money to spend. It's summertime. The kids are, out of whatever school was for the past year. So I do believe stocks are going to go higher, but I don't think it's going to go in a straight line, right? And so I kind of continue to look for these like glittery, what I like to call, this is like my new term, these select glittery opportunities, these SGOs, right? So like an Airbnb. So, it's cheaper to actually rent a really nice house for a week than to stay in a hotel. And I think coming out of this kind of, stay-at-home kind of mode where we really couldn't see family, people are looking for experiences, right? This is like kind of like this, last moment before everybody really has to kind of go back to work. And so I think a company like Airbnb is going to do well. So John Nigerian must have stolen my show notes and actually read them because he said exactly what I was going to say. It's okay. Great minds think alike. I think that the summer goes really well. And I think that it's okay. And I think that we're going to start to see a little bit I think where it starts to slow down is in September when kids are going back to school, where we have to think about childcare, where that unemployment runs out, that additional unemployment because of COVID runs out. And things are going to get, really, for lack of a better term, really real. But I think for the next few months in the summertime, I think it's easy breezy.